With Bespoke Investment Group co-founder Paul Hickey and Charles Schwab, senior investment strategist Kevin Gordon. Guys, happy overtime. Kevin, it is getting into the software section of earnings season. And today, I think I saw my first real wobble from the strong dollar. Commvault had a solid beat, strong recurring revenue and constant currency when it reported this morning. The stock got slammed after the open. I think it was down as much as 11%. Analysts blamed currency adjustments. It rebounded, ended, I think, 1% higher. How closely do we have to watch the dollar's effect on these reports? Are there opportunities?
I think the dollar becomes a pretty dominant factor. Maybe not as much in level terms, but sometimes from a stock price perspective, the change in the dollar, and when it gets really rapid either to the upside or the downside, that's when you tend to see more of an effect and an impact for the stock price. In terms of earnings itself, there's always going to be currency adjustments at play. Anytime you get a relatively large shift up in the dollar like we have over the past several years. If you zoom out and you look at the dollar and look at maybe a 5 to 7 year chart of the dollar, it's been pretty strong. So it's not as if this is a news story where we've had dollar strength. I think the key moving forward is how much do we stay in a dollar strong era, or does that start to shift? And I would think that if you look at the policy landscape that's been put out there, at least from a Washington, D.C. standpoint, there's probably not a lot that suggests material dollar weakness, especially from a tariff and immigration perspective. So I think that it's at least here to stay with us now, but I don't think that it's it's this overall wet blanket on the market. I think that companies can continue to, kind of move out of that maybe slump that's associated with it. It's very similar to what we saw in the 2022 period, where, yes, you did have a pretty stressful period from dollar strength, but eventually companies were able to move out of that.
Okay. Paul, have we moved from a period where we're constantly talking about the Fed and the impact of yields on the market to the DeepSeek and AI era and the impact of China on the markets?
Yeah, I think the best news about this DeepSeek is that we're not talking about tomorrow's Fed meeting. And when it comes to the Fed, they're widely not expected to do anything tomorrow, and that's a good thing. The less the Fed has to do, the better it is for the market, in our view. And so, we constantly talk about, maybe the Fed's not going to cut as much going forward. Well, if they don't need to cut, that's a good thing. And as far as the DeepSeek news over the weekend, we've seen some major disruptions in the market over the last 2 days. But at the end of the day today, there really hasn't been that much of an impact on a market-wide basis. And what's really interesting is if you look at the market cap lost in NVIDIA over the last 2 days, it's about equivalent to the market cap gained in Apple, Amazon, Meta, Microsoft, and Tesla, I believe. And Amazon, those five. So it's been about equal. So it's about a shift of the advantage from one to the other. And I think overall, the cheaper AI trends that we're seeing have been sped up, but that's a resounding positive for the economy as a whole.
So rotation within the mega cap tech names. Kevin, want to get your thoughts on this. What's going to matter more here in the near term? Is it the Fed and the impact of that decision and commentary we get from Powell, et cetera, on the bond market? Or is it going to be earnings, particularly some of these mega cap tech names that have driven the broader S&P?
Well, the easy answer is yes. I think all of it probably. No, I think from a Fed perspective, now that they've started to introduce and do more scenario analysis as to what potential impacts there are from a policy perspective, I think that becomes important. And especially, the last press conference when Powell started to talk more about tariffs and really allude to the fact that, more members were starting to implement that into their analysis and how they think about the economy. I do think that's important. But from a broader, macro standpoint for the market, Paul makes a really good point about how the theme around what is being pinpointed from the investor community in terms of, whether it's what is cheap in market terms or what's cheap in AI terms and what's cheap in CapEx spend terms. That becomes really important. It's actually a shift, I think, that predated what has happened even yesterday or over the past couple of weeks, where even if you back it out 6 months, there has been a pretty clear shift in leadership out of tech, specifically tech, the sector, and maybe more towards communication services and consumer discretionary. So even within the big three that are typically considered that growth trio, you're seeing a pretty meaningful split there. And of course, tech has been weighed down a lot more by semiconductors, but that's a meaningful chunk of that sector. So I think that's going to be an important story and theme moving forward is within earnings season. If there is more of a spotlight being shown specifically on CapEx trends, then I think that's probably going to be a differentiator as to who really carries this next leg of the bull cycle.
Okay.